person who's coming on stage to give a presentation. The person is Maysam Rizvi, CEO of Elifinty.
Hi, everybody. I'm Maysam. I'm the CEO of Elifinty, which is a purpose-based fintech company in the UK. My background is banking. I've spent 15 years in banking, working in senior roles for JP Morgan, United Overseas Banks, and other banks. And I'm also a fellow of the Royal Society of Arts, also a fellow of the Financial Health Fellowship, which is a fellowship supporting financial health within the UK. I also sit on boards. I'm sitting on a board of a charity called Toynbee Hall. If you don't know about this, it's a 200-year institution which supports getting rid of poverty within East London. And I also spent some time on another board of a charity called Spendable, which does free debt advice for people challenged. You can see the theme of financial inclusion there. So just starting off, if I can get to the slide really quickly. So the topic I'm talking about today is starting up your fintech and relocating it, and the challenges and opportunities that it presents. I want to start with Elifinty. So Elifinty is an award-winning company. We've been selected as the top 50 Vodafone tech startups for 2019. And I want to start with the problem. So when we started looking at this market and we started looking at the opportunities that it presented, we started looking at the people. We wanted to serve the underserved. And we found that the reason why a lot of people struggle is due to difficulties in financial education, the lack of it, which gets them into problems. The other issue is that there is systemic, I don't want to use the word discrimination, but separation, and they struggle with it. They also struggle because the institutions that are set up to help them, charities, government institutions, are overwhelmed. They're unable to cope. And 45% of these people suffer with mental health illnesses associated with financial stress. And we're talking about 50% of the UK population. That's a huge number. When we started looking at this market, we wanted to find out who are these people. And these aren't drug addicts or people who are unable to cope with their finances. These are teachers, students. These are people who are living paycheck to paycheck. People who are struggling with unmanageable debt, struggling with bad credit scores, low income, low financial literacy, or no savings. So when we looked at the problem again, we said, well, this is a difficult problem to solve. How do you solve this challenging problem? So we looked at all of the players, the individuals, the institutions, and the organizations that support these individuals. And we found out an interesting thing when we looked deeper. One of the things we found was that it wasn't individuals who were dealing with these finances, it were households. In some instances, a partner would just hand over their account details, and one person would deal with the whole family finances. So our solution was to look at all parties and create a solution that serves all of them. An app, a platform that serves everybody. An app that can help predict before financial problems come about, that can help you connect to banks, find those solutions if you need them beforehand, and helps bank reduce losses from these customers, and also help digitize some of the charities and government agencies that support these individuals. So people can get support quickly, but also help the institutions deliver those services more effectively. And that's how Elifinty was born. And there's a purpose to giving this backstory, because it's important to understand how we got formed, to understand how we move forward. So part of the solution that Elifinty delivers is providing control, preventing problems, solving those problems, and helping sustain in the long term. And we do that through effective expense management, debt management, income support through those charities and institutions I was talking about, and financial goal management to improve long-term financial stability. So to put it more into context what that means, so we take Matthew for example. Matt is typical. He's struggling with his finances. He hasn't been able to keep up with his bills, and now he is struggling. What the app provides is control. Once you connect your accounts, it auto-budgets. It figures out how much you're spending, where are you spending, how can you reduce some of those spendings, how can you be more effective. With intelligent insights, it's giving him more control and more predictive behaviors so that unexpected challenges don't hit you. And if he needs support, instead of going to an institution and going through a harrowing, degrading process, it's available to him at the click of a button. And we do that through a two-app process. So we have an app that helps the individuals manage their financial lives, and an app that helps institutions manage their processes. And they work in tandem together. And it's all GDPR compliant, which means that the individuals are always in control. And to help sustain you in the long term, it's all about goal engine. So the goal engine within the tool helps you set goals, identifies what needs you have. Is it financial education? Is it the right financial services? What is it that you need? And helping you set those goals and achieving them through behavior management and gamification. So the result is Matt is back in control. And the reason I bring this up is because when we started looking at our market and we started thinking about the problem, we were deeply rooted in the need. What is the need of the customer? And I think that is essential when you're setting up a fintech company, or any company for that matter. The only difference is that we're in a highly regulated environment. So what creates fintech opportunity? And this is where the key drivers, and you know these already, is that customer expectations are changing. People are expecting better from their technology. They're expecting more value for money. They want more integrated services. This could be the impact of Apple, for example, which has changed the dynamic of how people look at services. Technology is changing. You've got artificial intelligence, big data, machine learning, open API architecture, blockchain even. And competition is changing. Before you had the incumbent banks, now you have merchants, and you also have fintech companies. And regulation, more importantly, is changing as well. And it's an amazing dynamic, which is creating great opportunities for companies like us. Now, when you're looking to relocate, it's important to go back to the basics, to understand the market that you're going into, to look at the regulations and the competition in that market. Because without understanding that dynamic, you're expanding into a place where, into the unknown, and it might be a very expensive mistake. So as an example, when we started looking at Europe, we were amazed that Europe is not one market. And I think we all know this, but it's 44 countries with 24 official languages and more unofficial ones. It's got 8 ethno-linguistic groups, which sometimes cross borders. And it's got 7 socioeconomic groups, from the wealthiest to the poorest. So you need to make sure your market is addressable. So we had to look closely at our markets. So as an example, Malta, for example, population of 433,000 as of the last poll. 47% are financially vulnerable, which means they have difficulty maintaining their finances. 9% are financially challenged, which are facing difficulties in paying their bills. This, by the way, is not the worst country in Europe. The average is around 56% in Europe. In some markets, it goes as high as 70 to 80%. So, market tick. Then you start looking at regulation. And I think one of the greatest things that's come out of recent regulation is the PSD2 directive, especially for us. Because in the payment space, the ability to give third parties control on behalf of the consumer is a great opportunity for companies like us, but also for the individuals to get services that they want and they need. In the UK, for example, open banking regulation was introduced along with PSD2. If you haven't read some of the reports around this, I'd really recommend the Capital Markets Authority 2016 report and the Open Banking report in 2017, which are fantastic reads because they talk about competition dynamics, they talk about the technology, they talk about processes and procedures. And open banking has done that within the UK. All major banks in the UK are signed up for the open banking regulation, which means they open up their APIs to third parties like us. The approval process is also very, very innovative as well within the UK. So you have the sandbox and you have the direct support services which support us. And both of these have been instrumental because the key things you want from a regulator are capacity, responsiveness, and understanding. And this is an example of a recent dealing with the regulator where they changed the meeting. And as you know, time is of the essence for a fintech company. And the key thing here is that talks to the motivation and the culture of the FCA, that they're willing to engage and listen and also acknowledge that they're wasting a fintech's time. So I'm going to talk through some of the Maltese regulation. I won't bore you, I promise. So the Banking Act is for bank accounts, Investment Services Act for investment services, Insurance Business Act for insurance businesses, and Financial Institution Act for lending. And what we found is that there isn't a fintech-specific regulation. So if you're a fintech company, you might fall in any of these categories, and depending on what licenses you require, if you're lending within your platform or if you're providing account services, you might have to go for one or two or more licenses. Key thing to remember is, of course, that adds time to your process. The interesting thing about Malta, and we've heard this all morning, is the number of innovative regulations that are coming out. We heard about the VFA, etc. And these are fantastic because they're going to change how fintechs can interact with the regulators. So, competition. I wanted to talk about how certain companies operate. So, you have heard about unicorns. So in my view, unicorns are companies that have had the first mover advantage, that have got amazing growth from users, and have delivered fantastic services. But what's happening now is that the fintech space is getting crowded. And now you have innovators, which are marginal improvements to existing products. But more importantly, Fintech is not about technology. Fintech is about business model. Dramatically changing the business model for your customers. A really good example of this is the likes of TransferWise. Now, JP Morgan has been in the payments business for years, decades. And TransferWise has beaten them to that game. The key thing for any company like us is that when you're going into a new market, you need to think about how are you going to compete in that market? Because it's about getting customers to you, but also away from your competition. And that can be expensive. And it's something we don't talk about. Funding. And for a startup company, which has no profits, has revenues, but not profits, because you're still growing, how do you fund your expansion? And I think if you think about UK, for example, as a market, it's been very helpful for us because it's an $8 billion a year funding market for startups. We're talking about 10,000 companies a year getting funding from private and public sources. And you have the likes of Innovate UK, which support innovation through grants. And you have the SEIS and EIS schemes within the UK that support a supportive tax regime. Now, we've heard about the supportive tax regime within Malta. I mean, it's amazing. So I don't need to talk about that much. But I'd like to conclude on what we talked about. As a fintech company, you need to understand your market. You need to understand the regulation in that market. And you need to understand the competition. But more importantly, as a purpose-built organization, we promote the importance of building trust with customers. So if you're going into a new market, make sure you're building trust. And having a friendly regulator always helps, because there will always be complications. Rules within different countries are different, even within the EU. PSD2 application is not the same everywhere. So having a friendly regulator you can talk to is extremely helpful. And understanding competition. But more importantly, making sure you have the funding to fight that competition. That's it from me. I think in conclusion, make sure you're sufficiently funded. Treat every market as your first. And do your due diligence. Thank you very much.